Good morning, doctor. This is a presentation for MGM 4321 Activity 3. We are Group 2. These are my group members. Now I will introduce the background of the company. Okay, next page. JP was established in 1996. Since then, it has established itself second-tier audit firm after the Big Four. Currently, they have 8 branches throughout Malaysia with a workforce for 100 professionals and semi-professionals. Okay, next page. Okay, let's consider the first question. Why the person was charged? The issue is the Securities Commission Audit Oversight Board has sanctioned the audit firm JAP and Hilmy, a partner at JAP, for providing prohibited services. And the obligation for Hilmy was the engagement partner for the audit of 5 public interest entities when he prepared the financial statements for them and their subsidiaries. As the engagement partner of public interest entity, the AOB found that Hilmy had failed to perform sufficient audit procedures and obtained sufficient audit evidence to support the conclusions reached in the area of fixed deposits, share capital and other reserves, provision for defect liabilities, revenue and cost of sales, and group consolidation. In most instances, the audit evidence in the audit file is either incomplete or inadequate to support the audit work performed, the basis of judgment applied, and the conclusions reached. Okay, I will pass my group members.
Okay, for what is the law that being breached? According to number 8 of section 266, the auditors must report the register of company if the errors too serious. It can be considered as the errors contravene with the provision in the company law, and the errors could not be corrected, even the errors are brought to the directors. In the case of Red London and General Bank, an editor should consider and state the true financial provisions of the company. However, if the editor does not take action in examining the books of the company, then the editor should be liable for breach of the duty. In the present case, the factor is similar. Based on Jamie, Amy, and Hilmy submit editor documentation, the editor advance was not completed and official to support the editor work performed. And however, 3 of them have not reported to the company that areas of the account book. In conclusion, the action of 3 editors were against the company law and under the section 266, so they can be challenged.
Okay, next we're looking at what are the sanctions given. Okay, basically there are the 2 branch, the breach 1 and the breach 2. The breach 1, which is the failure to comply with Malaysian Institute of Accountants by loss of professional ethics, conduct, and practice. For the breach 1, the sanction is penalty of 400,000 ringgit and the prohibition from accepting any PIE or schedule fund for a period of 12 months, as well as the prohibition from auditing financial statements of any PIE or schedule fund for a period of 12 months. And for the breach 2, the breach 2 is the failure to comply with the relevant requirements of the international standards on auditing in the performance of an audit of a PIE. For the breach 2, the sanction is the penalty of 150,000 ringgit, as well as the prohibition from accepting any PIE or the scheduled fund for a period of 12 months, and the prohibition from auditing financial statements of any PIE or scheduled fund for a period of 12 months. So basically, the sanction given for the bridge 1 and bridge 2 is basically same, but the difference in the penalty, the amount of penalty. The one is 400,000, another one is 100,000. Okay. In addition, in this case, on the 2nd April 2021, the GAP appealed to the Security Commissions against the sanction imposed by the AOB, and the Securities Commissions dismissed the appeal and affirmed the decision made by AOB. The prohibition to accept and audit any PIE or scheduled fund imposed in respect of the branch of the bridge of MIA bylaws and the relevant ISA requirements take effect concurrently from the 30th June 2021. Okay, next, please. Okay, next we're looking at the question C, and I will pass to my group mates.
Thanks, Mr. Chen, and that's our present about third part. What he's supposed to do to prevent these charges against him. We can start from the case itself. The way to prevent the charge against him is to be familiar with the relevant laws, such as the RS 60146 of the MRA bylaws, which prohibits an audit firm or its audit partner from providing accounting and bookkeeping service to its audit client. If they knew this, the audit firm would not make this mistake. Secondly, Mr. Himley should fulfill the duty of care to the company, and he must make his negligence in performing his duty as auditor. That is, the audit evidence contained in the audit form must be complete and sufficient to support the audit work completed. The foundation of judgment used and the conclusions reached. Next page, please. But the most important thing to do to prevent charges as an auditor is to be sure to enforce ethical conduct. And auditor need to know their power, including like section 2 to 6, subsection 4 to subsection 7. That's it. That is right to access accounting records, right to obtain information and explanation from officers of the company, right to have the auditor's report attached or endorsed on the financial statement, and right to attend the general meeting. Next page, please. It's important to be clear about your duties. Like, for example, if the auditors find an error in the company's account, and the auditor must report it to the company. In addition to this, it's important to remember that the auditor has the duty of keeping this mind will prevent the most mistakes from being made. Just like the case our group member presented before, the first one is the London MP sued General Bank in 1895, and here is there is another case covering industry to the Dickman 1990. The fact is, a man named Cameron borrowed shares in the company after reading the result of the auditor's report. However, it was later discovered that the result of the report misrepresented the company's profit, which is turn led to Cameron suffering losses. Because the auditor had the duty of care, and auditor owes duty of caring to the company. He then went to appeal against the auditor and the accounting firm for the negligent misstatement. But the court considered that no duty of care has arisen to potential shareholders. The auditor only duty care is to the company. So in the two cases above, one is failure to do the duty of care to the company, and another is to the potential shareholder. But the auditor must always know the extent of their power and their duties, and they should avoid from making negligence in performing his duty as an auditor. And auditors must know their own duty of care to the company, and they should avoid from making negligence in performing his or her duty as auditor. In this way, they can avoid as many careless offenses as possible. So next part, I will pass to my member, Mr. Wang.
Okay, let me answer what young auditor and the secretaries can learn in this case. The young auditor read this case and learn from it to compare with the Institute of Certified Public Accountant MIA balance on professional ethics, conduct, and particular MIA balance. It will not undermine the independence of all auditor, or where it poses it to self-inspection. Accounting and booking keep service should not be provided to audit sellers that are public interested in ethics. The audits share complete with the regulator requirement of international standard on auditor ISA and ensure that the project partner have implement sufficient auditor products and are sufficient auditor in ways to show to conclusion which in case of time deposit and quick of other reserves of key liability revenue and the cost sales and the group integration. The evidence in the audio file must be complete and should the work performed, the judgment beside apply and the conclusion reached. In a large the auditor is someone who looks to see how honest company's financial report by determine the level of accuracy and the cost that the company has account for. In addition to examine and prepare financial documents and read reports, auditor must explain the findings. This is what young auditor can learn from this case. Okay, that's all for my presentation. Thanks.